Ladies and gentlemen, welcome to week 4 of September of us collecting data on the HPT crossover, our favorite day trading strategy that we have been trading for over 13 months. I'm very excited because these market conditions have started to take a turn for the better. They have been absolutely ferocious, okay? They have been terrible. I don't even know if that's a word, but they have literally been horrible. These market conditions have been not fruitful, leaving traders lost in the wind, accounts blown, making bad decisions, okay? And we got to get away from those bad decisions. We got to start moving more towards that consistent profitability. And this is exactly why we crafted this strategy 13 months ago, okay? So overall, for the last 13 months, we are sitting at a 78% win rate, okay? That's 249 trades. 193 of them have been profitable for at least $1, and then 56 losses, okay? Month of September, overall, 17 trades, 10 wins, 7 losses. Now, if you're new to my channel, welcome. We are the High Performance Trader, the YouTube channel that collects reliable data, builds profitable day trading systems based off that data so that you can execute in the market with confidence, control, and conviction, okay? I started a team about 2 years ago. We're about 70 members deep, and we are growing strong, okay? And I pride myself on building traders that are leaders in the market, okay? These are traders, doesn't matter where they've come from, doesn't matter if they have experience. These are traders working on becoming the absolute best versions of themselves, okay? Because if we want to become profitable, if we want to make $1 million a year in the market, we have to be self-controlled, disciplined. We have to be motivated. We have to be prosperous. And we have to be very clear on what causes us to pull the trigger and get into the positions. This is why we set out 13 months ago on this study to actually collect the data so we knew exactly what to look for, okay? Does it work? Does it not work? If it's not working, what sort of precautions, what sort of adjustments do we need to make to tailor it in our favor? And that's exactly what I'm talking about to you today in this video. All right, so overall, let's dive right into our first trade of the week. So it's 9/23/2025. Okay, now once again, rule number 1 is identify open print. Open print, the 930 bell price. Why do we watch it? Well, it all goes back to our 3 main goals, objectives, every single day as a day trader. All right, 3 main goals. They're going to get you across that finish line to consistent profitability. Number 1 is identify healthy opportunity. Our job is not to be right. It's not to always get every single trade perfect, okay? Perfection is not our goal. Our goal is to differentiate unhealthy market conditions to healthy market conditions. Do we want to participate or do we want to stay away? Okay? I don't care if you, think about it, guys. Obviously, the market's not going to always have good opportunity. We know this because the last 4 weeks have been atrocious. Okay? So, once again, rule number 1, identify good opportunity. Rule number 2 is execute on it. Rule number 3 is manage risk. So, back to rule number 1. How do we identify good, healthy opportunity? Well, we must watch the levels that the banks are controlling price at, okay? These are our pit numbers. Previous day high, low, open, close, and my favorite, open print. Open print is the 930 bell price that has abnormal amounts of volume at it, okay? We cannot move price. The banks do. So it's up to us to identify where they're at and who is controlling it, buyers or sellers. So rule number 1 is identify open print. Rule number 2 is identify the moving average cross, okay? I've adjusted this step because we're not always going to get a moving average cross. So it is now identify price action respecting the moving average, okay? This is a moving average cross. This is a bounce off the 20 EMA, okay? This is some sort of price action respecting a moving average, okay? The moving average needs to be respected. It needs to be in play, okay? It can't be flat. Can't just be disrespected. It needs healthy price action off the moving average, all right? And then number 3 is, once again, that RBI GBI, and I really want to dive into this today in this video, all right? The RBI GBI, once you spot it, you do not necessarily enter short. Josh, why? Well, one thing we've noticed in these current market conditions is that if you are entering far away from the 20 EMA, whether that's on the 2-minute or the 5-minute, price is going to come back to it relatively quickly. Overall, do not enter far away from the 20, okay? Wait for price to come back to the RBI or the GBI in respect the moving average. If and when price comes up to that moving average and cannot close outside of the moving average, this is your entry short. I'm going to say it one more time. If price cannot close outside the 20, trade with the 20. One more. If price cannot close outside of the 20, trade with the 20. Okay? Guys, we are notoriously known for simplifying day trading. This is one of those times, okay? All too often, we overthink our entries, our exits, our decisions, our behaviors. And that just leads us frustrated, making bad, late, irrational entries. So, make sure if price is not closing outside of it, just like this, we close close to it. We may even close on it. But if you are not closing outside of it, you better trade with that 20 EMA. That was a great short play right there. We actually went short right here, and we went short right here because we got another green bar ignored. Where does the stop loss go? Right above the area of value. Okay, so guys, so far, if you like what you're seeing, make sure you hit a like, subscribe, drop a comment, ask some questions. I would be more than happy to break them down for you. And for anybody that wants a free mini course on this strategy, guys, click the link below. Okay, I send you a full mini course breaking down our strategy. All you have to do is click that link, put your first, last name, email in, and I will send it to you directly. All right, let's dive into the next trade, 9/24/2025. So once again, what's our three-step approach? We're using these tools to identify that good, healthy price action. Okay, everybody loves some good, healthy price action. Number one, identify that open print. Number two, identify that moving average cross. Okay, now we're staying patient because we are not next to a critical level. This is very important. Bring it back to our main objective as a day trader, identifying healthy opportunity. How do we do this? By watching the correct levels. This is previous day high, low, open, and close, and open print. This right here is called previous day low. This right here is called a green bar that gets ignored right next to PDL. That would be a short play. Beautiful setup. Then let's dive right into 9/26/2025. Okay, this was Friday, last trade of the week. We get a violent move off the open, followed by strong selling out of a supply zone up here at 662. Price falls down below open print. We get that moving average cross. We get that green bar that's disrespected. That would have been a beautiful short entry targeting end of day. But let's go back to our new and improved way of trading our strategy. Identify, ready? Identify the fact that we cannot close outside the 20. So what do? We trade with the 20. Okay, guys, the biggest takeaway from this video. If you cannot close outside of the 20, you trade with the 20. I appreciate you guys. I hope this video helps you identify good opportunity in the market. If you want more information on this, once again, click those links below. I'll see you in the next lesson.